So in this video I'm going to be walking through a share that I purchased a number of years ago called Boohoo.com. Now if anybody doesn't know what Boohoo is, Boohoo are an online retailer. They sell clothing. I purchased it and I think my return was about 300 odd %. We're going to go through it now, through an example now, and I am going to calculate my weighted purchase price and my weighted sale price, and then I'm going to have a look at what my annualized return was and what my total overall return was. So as always, please do your own research and make sure you are comfortable with what you see before you take a position. So Boohoo.com I purchased in 2014. Was when I first took my position. I kept it until 2017, and in that time price fluctuated quite a bit. In total, my initial investment was about £1,600, and I sold it for a total of £6,519. So just to explain this table a little bit, I've got my date here, I've got whether it's a buy or a sell, I've got the price that I either bought or sold at, the quantity that I bought or sold, and the total cost, which is the price multiplied by the quantity to give you my total. So any buys have been put in negatives and any sales have been put in positives. If we look at the quantity here as a sum, it comes back to 0, and I've netted off my purchases with my sales to give me that almost £5,000 there. So on an individual level, I've weighted out my costs and my buys and my sales. So my purchases there are those two, quantity purchased are those two there, and then a simple weighting there of my total purchase price divided by the number of shares that I purchased to give me a weighted purchase of 31p. And if I go on to the other side, I've got my sales here, so I've added all my sales up. I've added up the quantity, which comes to the same quantity as my purchases, which makes total sense because I have 0 left now. I closed the position entirely in 2017, and my total weighted selling price was £1.24. So that's why I sold it for, which hurts a little bit because I'm looking at Boohoo now and it's £2.70. So I sold it way prematurely. But I still can't really argue with the return that I got there. It's a very good return of 307% over the period of time that I did it at, and I think it's 76% per annum as well, so definitely a good return, but could have sold it for a lot more. If I look at the quantity actually, so there's the 5,238 there. If I sold them all today and I held them for that period of time, all hypothetical stuff, you never know when it's going to be high or low, really. But I could have sold them for 14 grand if I held on to them, rather than the 6 that I sold them for. But hey, that's life. That's what happens. But yeah, you can verify the prices that I paid for these online. Just go to Boohoo.com. In Yahoo or something like that, or Google Finance, and have a look at the prices on these dates, and you'll find that the price that I bought and sold at corresponds to the prices that are on Yahoo or wherever. So this video was just to show some of the returns that you could potentially expect if you would follow some of the analysis that I'm going to teach. So these are print screens from my trading account. And you can see there the different prices that I paid and the different prices that I sold them for, debits and credits, debits for purchases, credits for sales, and then the dates that these trades were settled. So yeah, just to validate and to support the document that I showed you a couple of seconds ago. So if you like the video, please remember to like and subscribe. It helps me out a lot. And also check out the other videos that I have. I have a video over here which goes through the difference between investing and trading, specifically day trading. I have a video over here which teaches you how to calculate your weighted cost of debt. Very important if you're starting out. But yeah, hope you enjoyed the video. Take care.